But anyway, did you all get that? Did you notice that all the sales, of course, that's how we determine the sales are going to be credit accounts. Are there any questions on what any of those are? One question I often get is finance income. What's the finance income account? You might recall that we talked about the bank reserve account at one time. Bank reserve account, how does money get into the bank reserve account? Yeah, we get a commission from the bank, right? By financing that particular car and selling it to the bank, they give us a commission or a finder's fee on that, right? And they deposit in the bank account. So what did the business get? The business got a bigger bank account, right? We got more money in that bank account. Where did it come from? Finance income. Okay, so that shows the source of that money from that account. Okay, let's go down to the expenses. What are all the expenses going to be? Are they going to be debits or credits? Debits, because they cause earnings to go down, right? Just put a D at the top and draw a line down past all the expenses to show that it's the same thing. They're all debits, okay? And one thing that you can almost memorize is that if it's an expense, it's a debit, okay? Again, can there be an exception to that? What could be an example of an exception to why an expense might have a credit on occasion?
You were overcharged for something.
Good. You were overcharged and got a refund or reimbursement on that. Is that right? So you went and you accidentally paid twice as much as you should have. Maybe you wrote out 2 checks to pay the utility bill this month accidentally because you forgot you wrote the first one, and they sent you a check back to reimburse you for that second check. Okay? Again, that would be a credit. Yeah, it doesn't happen, does it? Yeah, that's a dream. But that's right. Got a credit balance. Got next month's free. But it's but if they did, if you return something and got money back, it would be a credit. But those again are unusual events. So almost everything, with rare exception, that goes to an expense is going to be a debit. Okay? Now let's look at some of those expenses. We start with kind of an odd title, policy-free service. There's different titles for this in different industries. In the hotel industry, it's called hospitality expense. But in this business, it's policy-free service. What happens is if an individual buys a motorcycle, maybe a used motorcycle, has problems with it the day after they buy it, they come back and say, hey, you sold me a problem motorcycle. Well, we don't want to have bad relationships with our customers, so we say, listen, let us work on it, fix it up, and get it back to you. We'll have it back tomorrow. Now, is there a cost associated with fixing that motorcycle? And that's policy-free service. It's just our way of keeping our customers happy. You know, I mentioned hospitality expense in the hotel industry. If you go down to the, what's that?
Service recovery.
Service recovery, okay. That's another topic. And one thing this brings up that I want to say is that I know in some hotels it's called hospitality expense. And in your or in a hotel you're familiar with, it's called service recovery. Yeah. And so each company might even have their own title for the same thing. Can you make up your titles if you want? Make them as descriptive as you would like. There is no standard listing that we have to comply with. And so one hotel might call it one thing, another hotel another, and so there's different types of things. But it accomplishes the same purpose, doesn't it, Tina? Okay? It's just to keep the customer happy. Now that's that one account. Let's look down the list. We've got the next one is interest floor plan. What do you think that is? Flooring. Remember? Flooring. Do we have to pay interest on all that financing we get when they pay for that motorcycle on our behalf? Yeah, we have to pay interest. That's where that interest is charged to. Okay? It's a credit to the bank and a debit to flooring interest expense. Okay? Or interest floor plan. Advertising expense. Any questions on that? That's pretty self-explanatory, isn't it? And then we go on to we've got different salaries or commissions accounts down there. Some companies, if they only have a couple employees, might have just one expense for all payroll. Payroll expense, that's what they might call it. Other companies where they might have multiple departments and they have one department for sales and one department for the service for the service repairs, one department for management and so forth, then they might have different types of expense accounts to keep track of the different types of departments' expense. Pre-delivery expense. Good question. What is that? Anyone want to guess? What's that? Pre-delivery would be, see, when you get motorcycles in, you get them in a big crate. And they're all in pieces to ship them more effectively. They're in pieces. Someone has to put them together. Put all the pieces in, pour oil in the crankcase, make sure the batteries are functioning and so forth. So someone has to do that, and that's all pre-delivery cost. Cars, the same thing. Yeah, assembly. Yeah, assemble them. A car's the same thing. You got to go in there, you got to put the hubcaps on, you got to do the stuff to make it more showable. Clean it up, wash it. Those are all pre-delivery expenses. Do you see that? What about payroll tax expense? Isn't that one of them? It says employees, payroll tax, right? That's for the company's matching share of FICA, the company share, not the employee's share, and for state and federal unemployment. And then we have employee benefits, and that's for medical insurance. That would be for vacations and sick days and things like that would be employee benefits. Okay? Yeah, Michael?
Why is not depreciation under accrual?
Okay, good question. Michael asked, why isn't depreciation under accrual section? Is it under accrual section? If you look over at the far left-hand side, you'll see in the accrual section, accumulated depreciation. Do you see that? Okay, so it's over there, isn't it? Then why do we have it in the expense side? Think about the entry. What was the entry we made? We credited accumulated depreciation, and what did we debit? Earnings. So that's the account in earnings that we now debit. Okay? So we're going to credit accumulated depreciation and debit earnings. The reason why we do that is because depreciation is recognizing the consumption of the value of the fixed assets over time, right? And so each month we made an entry, or we make an entry. We credit accumulated depreciation and we debit earnings, or in this case, depreciation expense. So we credit accumulated depreciation, debit depreciation expense. Over the life of that asset, we're going to end up debiting depreciation expense for the total cost of that particular asset, aren't we? Okay, turn back now to page 6.1. Very first page. So far, we've been talking about balance sheet accounts. Those are the assets, liabilities, accrual, and capital accounts. Those are called balance sheet accounts, right? And down at the bottom of the capital, we've always had the earnings account, correct? Okay, now the second financial statement that we want to talk about today is called the earnings statement or income statement or profit and loss statement. Just different titles for the same report depending upon what term you use in the capital section. And it now, with having this further definition of different types of accounts, it has, the earnings statement is a breakout of the earnings number. Okay? Now, I'll give you an example. I want you to hold your fingers here, and I want you to flip back to page 2.1. So hold your fingers here. Don't lose this place. And I want you to flip back to page 2.1, and I want you to notice down in the capital section of Stewart's Bakery, notice the memo earnings account. Notice that here the balance was $5,971.93 in the balance sheet. Do you see that? Okay. Now the question is, what makes up that $6,000? Why did we have $6,000 in profit? Okay. Now I want you to flip back to page 6.1 where we were just at. Look down the bottom right-hand corner. You see that number? $5,971. So the earnings statement breaks that number out. It tells why we had almost $6,000 in profit. It's taking the balance from each of these sub-earnings accounts and putting it into a format, a reporting format. with sales being, notice that we have in Stewart's Bakery, we have 3 different sales accounts. We have one called non-taxable sales, one in taxable sales, and one in catering sales, right? And we had accumulated in each of those general ledger accounts, in each of those earnings accounts, we had accumulated all the sales for those 3 types of sales, okay? And the earnings statement simply gives us the balance. How much in total? We have had, so far in January, $9,224 worth of non-taxable sales, okay? And that came out of this balance in this account. And in taxable sales, how much have we had? $14,510, right? And in catering sales, we've had $14,542, right? And the total of those 3 sales accounts is around $38,000. Is that right? Yeah. It's around $38,000. I just added up quickly in my mind. $38,000 in sales. Is that important for a business owner to understand that, what their sales were? Especially when they're looking from month to month, right? If this month we had $38,000 in sales, and next month we do something a little bit different, and next month we have $45,000 in sales, does that tell us something? Yeah, what we did was good, right? And if the next month we do something different, and we had $30,000 in sales, what does that tell us? Don't do it again, right? Without that level of interest, we can't make any decisions in our business, can we? We can't tell what's working and what's not working. If all we know is the profit number, we just know that bottom number, it doesn't give a sufficient level of detail to actually manage this business. You know, we might have a better profit next month than we had this month and not have been as good at doing something because maybe we just forgot to pay the rent this month, right? Okay? So it gave us a better profit. Some people picture it as though it's a subsidiary ledger of the earnings account, and if that helps to picture it, do it. But let me show you what it's set up in the general ledger like, okay? In the last few days, we've been looking at that, and we've been seeing the asset, liability, and capital sections, right, of the general ledger, okay? Well, behind here, something you haven't been seeing is the sales, costs, and expenses. So, like all the other balance sheet accounts, the asset, liabilities, capital, and accruals, we've got a separate page for each of the sales account, and a separate page for each of the costs account, and a separate page for each of the expense accounts. Okay? So in the general ledger, they look very similar to all those balance sheet accounts. But in order to do the balance sheet and come up with the profit, we first have to add up all the sales and subtract all the costs and expenses to come up with the net profit. Then we can complete the balance sheet. We're going to go through that exercise right now together. Okay?